Good morning, everybody. It's Wednesday, September 29th. Just going to run through the morning charts here. Here we can see the gold Kitco overlay chart. Yesterday morning we saw a pretty good shakeout early in the morning, around 4 o'clock, and had a pretty sharp dip. There was some big volume there that somebody just unloaded, hit the sell button, more or less a market order, and just flooded the market. And we saw it drop real sharp, and then it recovered a bit, took a pause, and then buyers stepped back in, and it rallied up and then flatlined for the rest of the afternoon. It ended up closing above this key resistance level, which was the 1300 mark, and I mentioned there the last couple of days, if we get a close above that, that's a fairly bullish sign for gold. This morning it's made a new high here, but it is trading right around the yesterday's high. Now if I pull up the 4-hour chart of the gold here, this is showing almost a month in time, but you can see we had the breakout above this upper wedge trend line. We saw it kind of grind sideways or upwards here, and then we had a sell down yesterday morning around 4 o'clock, came back, tested this area, which is also more or less the support line here from the previous high. And anyways, it rocketed higher on some pretty solid volume all session. We saw a steady buying into gold. Anyways, it's holding up here, and this is one of the reasons why I haven't wanted to short gold. Simply, it is in a strong uptrend. I don't want to try and pick the top in it, and because of quantitative easing and the devaluing of the dollar, it continues to give pressure to gold. So if we just zoom out here, you can see how overextended this move in gold is. It's just continued to kind of grind its way up without any real corrections. When we do get a correction, it will be most likely fairly sharp. I've been saying this for a while, and gold continues to keep grinding. But once we start breaking these lows, it's going to start to trigger stops, and depending on because we haven't had any shakeouts yet on the way up, any severe pullbacks, all these stops are going to be in place where everybody's got them. And of course, once it starts to trigger the first set of stops, it's going to instantly flush the price, most likely down to the next layer, and then that's how you cause a waterfall effect, and you'll get a great big sharp sell-off. And of course, the closer they are together, like this group here of 3, it's easy for once the price triggers that one, it'll trigger the next batch of stops just below it, which will flush the price down even more, and if it ends up triggering another one, it'll flush it right back down. So there is a possibility that we'll get a very sharp drop. It's very similar to what happened over here with this sharp drop. We had this continue bounce up with higher lows, and of course every time you have a higher low, you get different pivot levels where stops are going to be placed. And of course, and the closer they are together height wise, as soon as you trigger one, it's going to trigger the next one, and it causes this sharp sell-off. So that's what we're looking for, looking at in gold, and what's just around the corner, and why I don't really want to jump on the gold train right here after this big run up. It's trading near the top of the channel, and it's moved too far too fast, and I just don't feel as though we need to jump in it when there's potential for a very sharp sell-off to come around. I'm not saying it's going to go straight down like this. I just don't have any chart room, but it could easily unfold something like this over about a month period of time. We could see it pull back down into this channel and sort itself out from there. So if we take a quick look at the US dollar, this is the daily chart. You can see it's been headed down, had that nice bounce, had a head and shoulders pattern, ended up breaking down, had formed a bear flag, has dropped, formed a small bear flag, and this morning it continues to push down to new lows here, and it is filling the gap window on the UUP ETF, which could act as a support level. We may try and take a small position for a bounce into this oversold gap fill, but if I don't see a good setup and good panic volume in the dollar of people flushing their positions, then we'll maybe just let the dollar bounce, and we'll try shorting it somewhere around the 80 level because the dollar is in a downtrend. I'd rather play the overall trend. So if we take a quick look at the SP 500, yesterday we saw, this is a 4-hour chart. I'll just pull up the 60-minute. It's a little easier to see here. Yesterday we saw a sharp sell-off in the morning, came all the way down, and then it turned around, ground its way back up, made a new high around 330, 345. Anyways, it pushed back up, and just before the close it sold down on some pretty strong volume, and this morning it's opening pretty much flat. It traded flat through the night with a couple little blips here, but it's going to open pretty much flat this morning, so there shouldn't be much of a gap in either direction, and we'll just see what it does from here. Now the market does feel like it's still topping. It's starting to get really choppy, and I'm keeping my protective stop off right now. It was originally set at 1151, which is about a 2.5% drawdown on the SP 500, which usually I'll go up to about 3% on a swing trade, which this is. And right now I'm just keeping it off for now. I don't want to see a price spike as the market tries to top out here, and just to trigger me out. So I'm just going to keep my stop off for now. If we do happen to get a big rally and the market breadth and everything strengthens really strong, then I may end up, we'll send an alert out and we'll just get out of the position, and we'll start to find some setups with the overall trend. But from there, we're just going to let the market do what it needs to do today and unfold for the rest of the week. Anyways, that's it for now. I'll talk to you later. Bye bye.